You are listening to Mining Stock Education.
This book has been written, it's my legacy, let's say, to the mining community. It's hopefully it will attract young investors. And even for the people that are investing in this business, it's to improve their returns. I think by reading these books, they will, even when I wrote this book, it happened to me that I became a better investor.
Welcome to Mining Stock Education. My name is Brian Lenny. Today with me I have Jacques Bonneau, geologist and author of The Art of Investing in Junior Mining. In today's show, you are going to hear Jacques' background, why he wrote his book, and how it can help investors invest in the junior sector, and what he thinks about the current opportunity in the current market. Jacques, it's great to have you on the show. You know, you've been in this sector for more than 40 years, geologist. It seems like your career has spanned, every aspect of the mining industry. You've definitely seen it all. Can you give us a high-level overview of your career and how it brought you to writing the book?
Okay, well, I am a geologist. I work in all the stage of the evolution of junior mining companies, like in exploration, development, and even in production. And I was a field geologist, project geologist, VP exploration, and president of different junior exploration companies. That's my, and then in 2004, our company was taken over by a company called Cambior, and I just decided to retire. But I just fell in love in investing in junior exploration companies. I was using my knowledge as a kind of a competitive edge in the market, because I know everything about exploration, development, and even production. But I mostly started to invest in a junior, and I really like it. It's become a passion for me. And but at the same time, for the first 2004 to 2010, I started to work also for major companies, junior exploration company, as a consultant. Then I worked for flow-through funds that were looking to invest in good exploration companies, and I did some mentor with a young guy that wanted to become president of a junior exploration companies, and I started to let's say give talks about how to explore, how to find the right companies, and it was about everything about how to invest, how to evaluate companies. And it covered a lot of subjects like industrial minerals, critical minerals, the main criteria to evaluate a company. Then I did that for even today, even last year, I gave 3 or 4 conferences about how to invest in the junior. And then at the end of the day, so many people ask me, well, you should write a book. And then I decided as a legacy for my community to write a book that was ready in French in last October 2024, and it has been translated, and it's available in English since the beginning of March. And the title is The Art of Investing in Junior Mining.
Well, you did an excellent job with it. I've been in this business, and I've read just about every book out there on investing in these sorts of junior companies. And I think yours really stands out at or near the top of that list of books that really encompass, the aspects that people need to grasp. One question, learning about your background, I've definitely met a number of geologists in the sector, and I've come to the conclusion that geological knowledge doesn't always equate to being a good investor in junior mining companies. So what do you think separated you? Is it your mindset? Like, how did you become good at investing in these companies and actually leveraging your geological knowledge to make money?
Well, I think I am a kind of a rational investor. Then because of my experience, I think as a geologist, but also as being work in I would say in construction and development, I know that it's very difficult to find a mine. Even when sometimes I ask my colleague what they think about a project, the geologists sometimes they are not the best guy to tell you if it's good or not in terms of geology. Then I have a lot of experience that it's, I would say, negative. For example, when I was working for a flow-through fund, I went in Montreal to meet the president and the VP exploration of Osisko Mining, Osisko Gold. That was in 2005. And I was impressed by the two guys there, Bob Wares and Sean Rosen. And we have invested $250,000 at that time in the company flow-through funds at 20 cents. But at the same time, just after investing, I started to give some phone call to my friends, geologists that work on this mine. It was an underground mine at the beginning. And they all told me that don't invest in this thing because when they will be drilling, it will be parallel to the quartz veins. All the bulldozer and the trucks will go down because there's a lot of stopes on the ground. And then it was discouraging. But we still have invested, and the stock went up to $20. That's, you have to be careful with geologists. Sometimes they have a lot of different opinions. That's the way it is.
Right. And so like the lessons that you sort of outline in your book, were those through trial and error, or do you think that just your experience alone in working in the industry was enough for you to have a good structure going in?
At the beginning, yes. But after I learned a lot by investing, for example, geopolitics. When I started in 2004, I think at that time it was really possible to make a lot of money just by investing in Africa. Today, it's a lot more difficult. Even this morning, I see a company called Alphamin that they are in the tin business. And now there is a war in the Democratic Republic of Congo. And then the stock went up to $1.25 to 50 cents. But at that time, in between 2004 and 2011, during the super cycle, everything was nice. And it was quite difficult to lose money, I would say.
Well, geopolitics or jurisdictional risk is a great topic. Actually, at PDAC, when we met for the first time, we had a gentleman from the AME in BC come over and wanted to talk, and he wanted to specifically talk about BC and ask both of our opinions on sort of where the province has gone in terms of what they've done with the First Nations and sort of the governance stuff that they put in place. You talk about Africa. Africa has gotten more difficult than the Congo. I think is certainly a crazy place. But even in Canada, the difference amongst provinces and territories is very different. Is that your experience too? Where even in amongst like a tier 1 jurisdiction like Canada, there's a big difference between, let's say, Quebec and BC.
Well, I would say I will just talk about Ontario. Ontario, it's the First Nations. Sometimes they just don't want to do mining companies involving underground. And I was on the board of a company called Neobe, and this is one of my great losses in the last 5 years. I was on the board. We discovered a new niobium deposit in Ontario, south of the James Bay. This is a deposit that is probably a little bit better than the one that is in Quebec, called Neobec, and it's in production now for more than 50 years. 350 people work there, and they have enough reserve for another 40 years. But this deposit in Ontario is there. It's a nice location. It should be very easy, based on our experience, to mine it. And unfortunately, the company was not able so far to make a deal after 5 or 6 years to make a deal with the First Nation. And we are not the first one in Ontario. And I think the government must do something about it, because this will create a lot of jobs for the First Nation community, but also for everybody. And this is a critical, niobium is a critical metal. As you know, probably it's being used in the steel industry and for the bridges, for the aircraft and pipelines. That's too bad. But there is not too many things to do with this fact. I think it's the companies, the government must work together and try to find a solution.
So would you agree with the adage then that political risk or geopolitical risk is everywhere? It's not just in Africa. It's not just in maybe Asia. It can be anywhere.
You're right, but at a different stage. For example, I won't go to invest in a company in Russia or in China or in Afghanistan or, but even Canada, US, even in US, there are some states that are quite good, but there are other states that it takes 5 or 10 years before getting a permit. Then you have to know that as an investor, you have to ask the management of the company, and don't be shy. Ask the right question.
The thing I've learned, though, is that it's amazing how things can pop up. And let's say the Congo, for instance, it's been a while since there's been any internal turmoil within the Congo. And so investing in there hasn't been necessarily a problem. But it's one of these things that seemingly can pop up at any point. And so your timing, it seems like the timing of political risk can be cyclical too, whether it's South America, Africa, depending on what government's coming in, going out, what else is going on in the world. You certainly can be wrong in a number of aspects and pick right at the moment, and then in a year's time have a problem. So it's definitely an interesting topic. But let's go deeper into your book. So you break it up into 3 parts, and the first part covers your 6 golden rules. You talk about the cyclical nature of the resource sector, life of a company, probability of discovery, bubbles, and 80-20 rule. Let's start off with what the golden rules mean to you and why that starts your book off.
Okay, well, I think the golden rules, they came at the beginning of the book because they are the most important thing to know. And it's just not the golden rules, but it's all the lessons that these golden rules gave to us. For example, it's not to buy an old let's say investment. You have to be a trader. It's not a day trader, but that don't marry your juniors. It's then you have to learn all these things. You have also to learn that all the investment that you do in a juniors are not going to be a home run. Okay. And probably 2 companies out of 10 will give you 80% of your profits. Then you have to know that because, but the most important thing is the cyclical. It's cyclical. Sometimes you start to invest it happened to me when I started to invest. I was in a super cycle, and then it was really easy to make money. But in the last 10 years, it was quite tough to make money in this business. Probably 2016, we had a nice 8 months, which is not a lot of time. And in 2020, we had another year. Then you can make 100%, 200% if you are lucky during these years. But the other year, you will lose probably 10%, 15% or 20%. Then it's tough for the investor. And when you look at the TSX Ventures, in the last 50 years, it went up 45% of the time, down, let's say, 40% of the time, and there was some consolidation period. But since 2012, the TSX Ventures has been up only 13% of the time, which is not a lot, and it went down by 69% of the time. Then it's very difficult. And these times, I know that I made money in 2016, make money in 2020. This year, I will be making money because the price of gold is going up. But it's a lot more difficult than it was 20, 30 years ago. That's I can tell you that.
Absolutely. So when you talk about that sort of trading mentality, and how people look at this sector, does it make sense for someone to be, you use 2016 and 2020 as examples of two good bull markets, and I participated in it too, and it was fantastic. Does it make sense for somebody to hold a portfolio of junior companies in those 3 or 4 years in between those bull cycles? Or like, when do you get in and out in terms of your portfolio percentage in your view?
It's a tough question. It's always tough to sell. That's for sure. All the investors they are telling me that they are good investor but bad seller, and it's why in the book I put a kind of a one figures that gave you some exit strategy when you have a junior company. My preferred period to invest it's when it's in consolidation near the bottom. That lasts sometime 12 months, 14 months, or maybe more, 2 years, even 3 years. But this is the best time to think about what you buy. And during this period, you know that there will be a bullish period. And during this bullish period, everything will triple. It's more or less the case. And then this is my preferred period. The other one is when you are in the when the tide is rising, like maybe today. We are at this stage. It's probably the best time to accumulate. Maybe in the last year, it was at the beginning. It was the good time to start to buy producers, gold producers, and companies that have resources that they are trying to develop them. It was everything that I bought in the last year. It's almost not double, but they are up by 70% or 100%. Like it might be Hanico Eagle, maybe not Franco Nevada, but a lot of companies like G Mining, a lot of companies with good resources, they almost all double than in the last year. Then that was a good time. And normally, it's the first companies that react when the stock is becoming bullish. And now, after that, it's the junior exploration companies. And we will see if 2025, we should see the juniors going up. That's obviously we have Trump that is there. We don't know. It's quite difficult to forecast something with Trump, but normally the juniors should go up in 2025.
You're talking about the different segments. Let's pretend that you're a newbie investor. You're brand new. You've caught onto the sector because you saw the gold price has gone up, and you're interested in investing. Let's stick with gold. So how do you pick what end of the spectrum to play in, whether it's production, development, exploration, the various business models like the royalty or prospect generation? How do you think what is the best way to sort of pick the right company for you to speculate in?
Well, well, if you see that the phase is starting to be bullish, you should buy the major companies first and the intermediate companies, and then wait to see what will happen to the juniors. And then you may sell your major gold companies and intermediate companies, and to start to buy junior exploration companies. That's my way of thinking. Maybe in a few months I will sell my producer and my intermediate company because they have almost all double. And then I will start. Well, I have already started to buy junior exploration companies in which I think that they have good management and good projects. That's and it's very easy for good management right now and good projects. It's very easy for these companies to raise money. It's tough for most of the junior exploration companies, but the best one with the best management, best projects, they can raise a lot of money. I'm surprised. It's in Toronto, $10 million for this company, 15 for the other. It's people recognize the best one.
Right, right. Well, what about the other metals? You know, gold is soaring. I think that's definitely going to grab people's attention in the interim. But you mentioned buying when things are consolidating, sort of at bottoms, and you can look around the metal space, and you could pick out some metals that probably are at all-time lows or multi-year lows, and their corresponding equities are dirt cheap. Do you branch outside of precious metals? Do you get into, copper, lithium, nickel? Do these
For
interest you?
sure.
Yeah.
For sure, Brian. To me, that's the easiest way to make money in commodities and when you invest in the junior exploration companies. For example, 2 years ago, we had the lithium. The lithium went up from, I don't know, I don't remember, but it multiplied by 700% increase in the price of lithium. Then, as an investor, your job is to find the best companies that are involved in lithium. And I can tell you that it goes for the main producer like SQM, like Marley, but also all the junior exploration companies that pretend to have good exploration project to discover lithium. In the province of Quebec, we had 5 or 6 big winner. The PMET, the company called PMET, anyway, that's the symbol. It went up to 20 cents to, I don't remember, $15, $17, just because they discovered a lithium deposit. But they are in Quebec, in the Bay James area, there are maybe 20 like this. And a lot of companies that was at 10 cents went up to 50 cents. And as an investor, this, the flavor of the month, I call it in the book, the flavor of the month. This is very important for the investor. To me, it's the easiest way to make money. And it's just not just for the lithium. It was the vanadium maybe 5 years ago. Right now it's gold, but maybe there will be a time for the silver. Antimony is becoming rare earths, might become the flavor of the month. But as an investor, in less than 20 hours, I suppose you can find the best companies in which to invest, and you will do 1,000%. It's the easiest way. It's a lot easier than to find the right, the right gold project, for example. But you have to take advantage of this situation.
For you, definitely being so connected to the industry and having the geological background, are you more interested in finding good projects, or are the people what attract you first?
At the beginning, it was projects. And then slowly it becomes to be the management. Because I was, a lot of my losses were because I was personally believing in the potential of the projects. But nature being the nature, sometimes there is nothing. And then I lost some money there. And even when the management was not too good, I was investing in these companies and I lost money. That's probably my big losses are coming from this situation. And then today, I recognize that it's management is the most important thing in the company. I am in the book, I have one chapter about the personal, and I gave the 3 characteristics that I am looking for to find the best management, which is entrepreneurial spirit, the expertise, and the communications, the network that this president or this company has in the world. I think that's, it changed them. Today it's mostly the management. And I see a lot of friends that are really, I have seen people making money, and even the brokers making a lot of money just by looking to the management. The projects, they don't worry about it. It was about the management of the company. And they made a lot of money just by focusing on the management. That's very, then management first, and then projects, because the good management should bring you good projects, or should create more value for the shareholders. That's simple.
Absolutely. If you had to guess, what is the biggest reason why investors lose money in the junior resource sector?
Oh, I know I do the same. It's just denial, hoping that they will find more or they will find something, let's say, during the next drilling program. And not worry about losing 20% or 30% of the stock. When you lose 20 or 30%, you should do your homework and look at it carefully and see, well, should I keep it or sell it? And in my experience, when it lost 30%, I would say 90% of my stock keep on going down. And then it's why I bought a stock at 60 cents. And then a year after not discovering anything, then the stock is at 10 cents. But I was still hoping that the project will generate something. And then that's my greatest loss.
Right. And so you've got a great chapter in here based on the probability of discovery. Can you talk a little bit more about that? And because I think it ties in exactly with what you just said.
The probability of discovery, or
yeah, it's part of your golden rules. You talked
yes.
about the number of companies that are out there, the number of discoveries that are actually made that are economic.
Yes. Well, we have to admit that in this industry, the discovery of ore bodies or mineral resources are quite rare. We have one chance out of 1,000 to one chance out of 3,000 to discover a big deposit. Then it's why in the book I said, well, don't expect to make an home run every time that you invest, because it's rare. But fortunately, the discoveries might be rare, but there are so many opportunities in this market to make money with what I call mini bubbles. And I gave, I would say, 25 examples. And these examples are, for example, a junior exploration company that worth 10 cents, and suddenly there's a new management coming. You like the new management, they have expertise, they invest themselves in the company. That's a very, very good sign. And you can be sure that the stock will go up. That's one thing. It might be a good drill intersections that maybe will not give you a deposit, but it's the stock may double, triple, quadruple. The flavor of the month. A company is looking for uranium, and suddenly the price of uranium is going up by 100%. Then you can be sure that the junior exploration companies will go up. But there are a lot of opportunities, and I think I gave 25 example, and I put the graph of these behavior of junior exploration companies, the price of their stock, just to be sure that everybody will understand what it means, mini bubble. That's because without the mini bubbles, it's a loser business. You need these, and these bubbles last. It's why I'm saying that you have to act like a trader, because these mini bubble lasts maybe the average is 11 months. Then it varies between 4 months and 18 months. Average is 11 months. It's why I'm mentioning that you have to get the behavior of a trader, because and it's why I put in the book when you should sell it, because it's very important to be sure that your stock will go up, but you have to get a strategy to get out of this stock one of these days, because it will normally the stock, it's from 20 cents to $1.50, and then 18 months after is the same price, 20 cents. That's the fact.
Yeah. Honestly, your book has done such a good job at these subtle nuances that I think, especially a newbie investor, may not think are as important as they are. And that's the biggest thing I notice about this book throughout it is you've got these little pockets of information that really put the investor in the right mindset of how to look at this space. And considering, like, I get bombarded with a ton of questions, and you can tell how long the person's sort of been in the investing or resource sector investing world by what they ask. And, honestly, like, picking up this book and going through it will really set your mind straight, I think, if you absorb it on how to look at it and ask better questions. One of the things that you do in part 2 in section 11, you talk about the favorability index. And this stood out for me because I'd never seen anybody put this in print before. So can you explain the favorability index and how you use that to invest in the sector?
Yeah. Okay. I have it here. It's a small formula, and let's say that if you have done your evaluation of junior exploration companies, you have look at all the criteria. You know that you have in the market is in a good mood. Let's say not bearish, but at least it's not bearish. Then the first question that after evaluating your company, it's like answering, there was a TV, on the TV, you say the guy was asking, last answer. Is it your last answer? I don't remember the name of the TV program, but it's the same thing here. It's I call it favorability index. First question is that you have to ask after evaluating is, if the company, what's the probability of this stock, which is at 20 cents, goes up based on my evaluation? And what is the probability that this stock is going down based on my evaluation? Let's say if it's the probability that it's going up, it's 80%, and the probability that the stock is going down is 20%. Okay? Then you multiply the probability that this stock is going up by the projected gain that you are expecting. For example, if your stock is at 20 cents, you think that it should at least go to 60 cents. Then it's a gain of 200%. Then you multiply your probability of 80% by 200%, which give you 16,000. And at the same time, this is my reward. Now you have to calculate your risk. You told me that it may go down by 20%. And what is the loss? Then you multiply the probability that this stock is going down 20% by the probability that the loss may be 20%. From 20 cents at the beginning to 16 cents. Then you multiply 20 by 20, it gives you 400. Then you put the reward on the risk, $16,000 divided by 400, which gives you 40. Based on my experience, when you get 40, it's a buy. It's simple as simple. I think investors should do because I tried this with investor, and some of them think that their stock will go up to 1,000%. Yeah, but that's it's you have to, every investor is different, but based on my experience, rational experience, don't put 1,000, okay, maybe it will go to 1,000, but start with 200% gain. But normally, if you do the same thing, you may do the same thing with another junior exploration company, it will give you, let's say, 30. It's the reward on the risk is 30. It's what I said on the book is you should think about it. You should follow this company closely. Maybe it will be, put it on a watch list. And when it's below 20, don't follow this company. And when it's 10, the reward on the risk is 10, you should just pass to another, forget this company. And it may change. The company may acquire a new project, but this is the best rational way to put a number on what you think about the project. based on your everything that you put in your head when you evaluate this company, all the criteria. And for me, it helps. That's for sure. And that's
It's an excellent way to do things. I think, especially having an engineering background, I'm very attracted to analytical or quantitative type methods for evaluating potential. And so it really stuck out to me. And I think, you bring up a good point that you definitely have to put some time in and understand how you're coming up with that upside potential and not be too crazy about gold at 10,000 or something ridiculous like that. But it's one of those things that I know from experience, this is a great way to quantify what you're doing in this sector, and it's getting into that mentality. So a fantastic section. The current market, you look at what's happening today, and you've sort of touched on these points. What's your view on the current market? Is this one to start deploying money into? And if so, where do you think they should deploy money? Is it gold?
right now, yes. I would say gold, copper. It's the problem with the copper is the China. China, I think it's they consume, let's say, 50% of the copper on the planet. Then China is not doing quite well. But in the future, copper will be one of the best metal in which to invest. Gold, I think I can give you a statistic. I will try to explain it to you. When the interest rate was high in US in 2001, 2007, and 2019, the Fed, the Bank of America, decided to cut the interest rate in 2001, 2007, and when they started it, 2 years after, the price of gold was 32% higher. Last time that they did it, it was in a few months ago. The first cut was when the price of gold was at $2,500. Based on the past, on the 3 last cut, the price of gold should go up by 32% from $2,500, which is $3,500. This is my, well, let's say, hope that I think the price of gold should go up by another $500. If it goes up by another $500, you can be sure that probably the junior exploration company will become the flavor of the month. That's a possibility for me. The other point is that for sure the US dollar is overvalued. Normally there is a negative correlation between the US dollars and the price of gold. When the US dollar might be, if the US dollar is going down, then the price of gold will go up. Then I think I am quite optimistic for 2025. That's for sure.
Do you think the gold price going up, do you think that's enough to bring investors into the equities? Because, people have made money off the gold, just buying gold itself. And clearly the buying worldwide has been at the top level, the central banks, the bigger entities in this world that have really pushed that gold price up for the reasons that you spoke about. But even though there's been money to be made over the last, let's say, year or two, it hasn't been this tide that rises all boats. So do you think, gold breaks 3,000, the narrative sort of goes in place with it, with interest rates going down? Is that enough to bring people back into the equities?
I don't know. I really don't know. There is another statistic, quite interesting statistic that I put in the book. The Standard & Poor's 500. When the Standard & Poor's 500 is making 20%, okay, at the end of the year, when it's plus 20% or when it's below 20%, when the Standard & Poor's 500 lost 20% during the year, normally the year after, it's not good at all for the juniors, okay? And even during this year, because people, when the Standard & Poor's, an investor say, well, if the Standard & Poor's is making to me 20%, why should I invest in the junior exploration companies? And when it's going down, it's the same thing. When the Standard & Poor's is losing 20%, then all the speculators are staying at home. Then this year, if the Standard & Poor's stay, let's say, between -20 or +20, which I think might happen, I think that would be quite good to attract new investors in our market. But we lack investors, that's for sure. There a lot of people should come back to this industry, because in the next 5-10 years, that would be the flavor of the years. But what is really motivating the investor? It's not necessarily the price of gold, the price of copper. It's mostly gold. That's one thing. It's the gold price. The TSX Ventures really follow the evolution of the gold price. It's when the gold price is going up, the TSX Ventures is going up. It's 100% sure. That's
Excellent. How about companies that you're investing in? Can you give us a couple ideas of companies that you think are worth looking at?
Well, there is one that I've seen in the PDAC, but I'm a shareholder now for a while. It's called Miata. I don't know if you call this a Miata. It's a company that is in Suriname. It's the same, more or less the same management, not the same, but anyway, it's the same management of a company called Founder. And the company Founder, it was 50 cents. Now I think it's $5 or $6. And it's the same geological, it's a model, more or less. It's the artisanal miners that discover gold at surface, and they go there, they make a deal, and they drill below these artisanal miners that goes down to, let's say, 10 meters. It's what they did with Thunder, and Miata is doing the same thing now in Suriname, and even their artisanal zone that has been mined are bigger. I don't know what they will find when they will drill, but they should get gold, that's for sure. That's one company that I really like right now. Okay, there is another one in Peru. It's called Anan Mining. Anan is a very good management, but also they have excellent projects in Peru. And one project, they optioned it to JOGMEC, which is a Japanese company. It's a sedimentary copper deposit. The deal that they have done with JOGMEC, JOGMEC is taking care of it. But at the same time, this company, they have two very large projects with everything about exploration potential. They have the good geology, they have the geophysics, geochemical anomalies, and the personnel is quite good. Then I like these kind of companies, but because they can explain to the shareholders why they are there, why they are doing exploration. They can put a model, a geological model, under what they see on the ground, and then that help the investor to better understand the geology and better understand the potential of the project. That's but Anan is another one. I like a company called Corix. They are in Namibia. It's the same personnel that Osino, and Osino was the object of takeover by, I think, a Chinese company. But these guys have another project now, which is a copper gold project, and I think they will succeed by discovering. They have already several 100 million tons, but I think they will discover more and more. And then because of the management, I like this company. And there are a lot, even my best success in the last months were companies with 3 million ounces, but you know that by drilling, keep on drilling, they will find 4 million ounces, like Collective in Colombia. There is a risk there, but they had 2 million ounces. Now I suppose they have 2 or 3 or 4 million ounces. G2, another company, is it G2?
Yep, G2.
G2 Metals.
In Guyana.
They are in Guyana, and they are finding gold month after month. Then the stock went up to $1 to $2. That's it's a sure bet in our industry. That's
Right.
I suppose that's it's where you are yourself. Yeah, I suppose you invest mostly in the most advanced project, or
Yeah, definitely. The more advanced developers are definitely where my sweet spot is. Being an engineer, I like analytical type problems to solve, and putting a value on something is much easier for me to do when there's an actual resource or a technical study that I can sort of play off and try to find that differential that you're talking about so well with that favorability index in terms of closing that gap. So that's usually where I sit. And then exploration, I typically do through prospect generation. And that's for a number of reasons, but risk being one of the bigger ones. But those are some great companies that you talked about. One final word, Jacques, can you tell us why you wrote the book, who you're trying to reach with it, and then where investors can find this book to purchase?
okay. Why I read this book is because a lot of people ask me to read the book, and then after years, a lot of people were asking me when the book will be ready. And then in the last 2 years, I said, "Oh, okay, I promise it." Then I started to more serious about this book, and this book has been written. It's my legacy, let's say, to the mining community. It's hopefully it will attract young investors, and even for the people that are investing in this business, it's to improve their returns. I think by reading these books, they will. Even when I wrote this book, it happened to me that I just became a better investor because all these graph and all these thinking, and I suppose that I will. I hope it will be the same case for everybody. It's not for a speculator. It's more for the people that would like to buy maybe 5 or 10 companies, and that's the main reason. It's kind of a legacy, and I say, well, I have to write this book for everybody. And my suggestion for the young guy that wants to, it's to start with maybe fictional. Fictional, is it a good term? Fictional portfolio, and then they will see if they are good or not good and what it's working and not working. I know that it's probably quite hard to ask to the young guy because I'll see them with their telephone, their cell. But that's the way it is. 20 years ago, I gave courses to my 2 sons about how to invest. And they were quite good. In fact, after 6 months, they were making a lot of money because the market was good. But they are good, these young guys, and we need more. Then that's. But anyway, that's. I hope this book in French, it was very easy to sell. In English, I am not an English guy. I'm well known in Quebec, but I hope I will find some people in Canada, across Canada, and even in US to spread the good news. That's my objective.
Is Amazon the best place to buy it?
Yes, it's Amazon, or you just go on the website investingingenieurs.com.
Okay.
And that's for the American guy, or in US dollars, euro, or Canadian money. You go there, and it's very easy to buy. It's Amazon. They will deliver it to you at your home for, let's say, another $5, and it's only $30. It's it's a gift. It's more or less $30.
Yep, absolutely. Well, Jacques, this is the book, sort of show everybody. We're going to link to the website and to Amazon for people that are interested. For me personally, I've read just about every book that's out there. Jacques has done a phenomenal job putting this together. And in my view, this can help anybody be a better investor in the junior resource sector, but especially if you're new to this, for $30, it's an unbelievable deal. And as Jacques says, it is a gift. Jacques, it's been great talking with you. Hopefully we can do it again soon.
Perfect, Brian. Thank you very much for inviting me.